Well, you heard a brief introduction of Hertz Farm Management. We manage about 220,000, 30,000 acres over about 6, 7 states. We have a staff of over 100 managers, and I moved to Monticello in about 1980, and been in Illinois since then. Started out in Iowa in 1959, so I've been around a while. You look at things, you look at a picture like this, you look at the nice straight corn rows, you look at the corn, so forth, it looks really nice. There's all kinds of land, but we're really in the heart of it here in Illinois, right in central Illinois. And to get to know you a little bit better, I'd like to know how many of you are landowners. Raise your hand. Okay, everybody's pretty much there. How many of you have bought a piece of land in the last 5 years? Quite a few of you. How many of you thought you paid too much the day you bought it? Everybody. Well, how many of you think the land prices are steady to higher in the next 2 years? Yeah, there's a few of you. How many steady to lower? Okay. I just wanted to bring you, under all is the land. You know, the land is the basis of wealth in this area. Historically, it's certainly the basis of wealth. And I'm going to go through these slides pretty quick. Most of you are landowners, pretty much know the basics like soil quality, cropland, excellent productivity index. That's one of the indications of the land. You get that. The drainage, you need to know if it's well drained or drainable. Flat, rolling slope, outlet available, ditches. That all affects the farmability, shape, size of the topography. All those come into consideration of what kind of farm you've got and what you can do with it. There may be some obstacles to some of those areas. You need to know where those are. Waterways and ditches, building sites, irregular shapes, all affect the value. And if you take a look at this map has a waterway in it and a building site up there. Would you believe that a farm just like this one sold for $1,000, $10,000 an acre? One just like it sold for $12,000 an acre in the same area. Why? Because the farmability was not as good. Soils were good, so it makes a lot of difference. And then there are also some environmental concerns. Underground tanks are concerned. Cleanup is needed. Chemical spills, if you can find those out. Junk, just plain, all that affects the value. Location, well, it depends on where it is. And available land in the area, there may not be any available in your area. And if something comes up, then you got to pay up for it to get it. Development influences, close to town, development comes along. Weather patterns, some areas are drier than others. And markets, if you're in a seed corn block, you can get, it's worth more money because it's higher income potential than another area. And the markets, how far you are from the market and how easy it is to get there. All that comes into consideration. The income potential is the key. Potential earnings, you look at that, you fit that into, how does it fit into your cash flow? Sometimes you can buy a farm and fit it right in. It doesn't cost you any more machinery. Doesn't cost the operator any extra expense, except a little wear and tear. And what's the potential income of that area, of that crop, of that farm? Government program eligibility. Well, it depends if you are eligible for the government program or if the farm's eligible. What's its history? What's the yield rating? And whether your financial statement supports it as a buyer. Value potential is up to you. What's the value to you? One of the unique things about farmland that it is in an imperfect market. A given farm could be worth more to one farmer than another, and one farmer can pay more than another, one land buyer. Value is measured by price. We always talk of land value being how high our land prices being value, but it really isn't true. Prices can be high or low, and the value is the same. The value of a given piece of land stays the same through the years, but it's measured in terms of more higher prices. And when you look at your long-term goals and what is high and what is cheap, you can't always tell. But each value to the individual potential buyer is different. It is unique to you. What are your goals? Are you interested in a quick turn, or are you looking for 20 years or 30 years or something you can pass on to your family? How is it? Are you going to operate it, or is you going to have an investment? What's the attractions as far as recreational or having it close to you? What's the emotional appeal? Is it grandfather's farm that he lost in the Depression, or is it the farm that you grew up on? So it can have some emotional appeal. Long-term or short-term depends on what you can do. Also, your risk-taking ability, your emotional stress. First farm I bought, it went down 25% the first year. I didn't sleep too well. In fact, my wife said, "I'm never going to let you buy another farm." Excess profits bring serious competition. So if your profits get pretty high, and you or you find a cheap farm some areas, profits get too high, you can bet that somebody else is going to figure out how they're going to take advantage. And that's going on right now with land, and that we're making so much money on the price that places in South America, the Ukraine, other areas of the world are rapidly going into crop production and the corn production, and they're increasing their production by modernization the same way that farmers here have done it. Excess profit brings serious competition. That's one of the economic laws. Can you make a decision? You know, some people procrastinate, and the land market today is that you want to make up your mind what kind of land you're going to buy and then see if you can find something that fits it, and you got to make up your mind pretty quick. Can you make the decision and live with it? Are you going to worry about it? Seen landowners that worry about the decisions that are made as far as fertilizer, chemical, crop inputs all the time, and really it doesn't make too much difference as long as they do a good job. Land market availability. Is the land available? The source of those farms can be listings, auctions. These can be scarce at times. We've gone through periods in Illinois when there wasn't anything for sale, and other times when there was quite a bit for sale. We've gone through times when there were more listings than auctions, and right now we're in a period of auctions. Why is there more auctions right now? Well, because people don't know what the price is. They want the farm, but they don't know what the price is as far as the sellers or as far as the buyers are concerned. The good professional help is available in buying farms. They have accredited land consultants, professional farm managers. If you don't know, ask an expert. They can help you buy land. What are the forces driving land values? Well, of course, higher net income for farmers, upward trending crop yields, higher crop prices. But it's interesting to note that most farmers that are buying land right now aren't using the high crop plots, $7.50 corn or $15 beans. They're more like using $5.50 or $6 corn and $12 or $13 beans. So the income available and the cash that's available. If you have cash and you have income available, that determines who can buy it and how you buy it, because it takes a bit of a cash in the farm to buy it. And of course, rents are going higher. They're shooting higher. How high, I don't know. There's a great rental competition out there to buy land. If you need an operator, it's not too hard to find one, but negotiating the rent and the lease is pretty critical, and it's really difficult. I'm telling you that you should figure a cash flow statement on your farm that you're looking at and figure out what the potential cash returns would be. To see how things had happened, you look at this chart and look at 4 1/4 corn and $10 beans, and you use a cap rate, and we're running up to $6.50 and $13. And I'm not going to spend a lot of time on these expenses. They're typical. You can be higher and lower in different areas. But this gets down to the nitty-gritty. What's your net income? At 4 1/4 corn and $10,000, net income is $62,000. At $6.50 and $13, $127,000. At a cap rate of 5%, you could pay that, if you use that for your figures, $12,787 an acre to get a 4% return. And typical land in Illinois sells in the range of 2 to 4% probably. If land gets higher, you get a higher rate of return, the price of land goes up, and if you get a lower return, it has a tendency to be lower. And farmers have a different cap rate than investors, and it depends on what you're satisfied with. And if you get down to 6% cap rate, rate of return, at that high level, you're at 10,656. At low, you're at 5,000 in that area. Well, what happens? You know, what you think is going to happen. So in this market, if you're borrowing money, it makes a lot of difference. But right now, we're in a situation where most farmers don't have much debt. Average debt to equity is around 10%, and at the high, we were 30%. That's when we were getting in trouble. And that's why today is different than the 1980s. And the debt to asset is only about 2.6. Government payments. Well, there's a lot of uncertainty about government payments now. And we've had them up to high as $40 an acre. We've been down around 20%. But it looks like today government payments are going to go away for certainly direct payments. There'll probably be some other payments, conservation reserve, other things, but that's not a certainty. But it's interesting, a lot of the land buyers aren't worrying about government payments. They're buying them anyway. Limited amount of quality land offered for sale, and that's true. And we're seeing more on the market, which I'll talk about it a little later, more on the market than we've had for various reasons. A lot of it's tax. There's a good demand for quality land, and in Illinois we're fortunate to have quite a bit of it. In the whole of the Midwest we're in pretty good shape. Weaker demand for recreational land. It used to be that around the collar counties of Chicago, around Chicago, we would have buyers come out with $500,000, $250,000, and that's their fund money, and they would buy a piece of land so they could own it, to look at it and walk on it and drive their four-wheeler on it and park their camper on it and build a pond on it and so forth. We're not seeing that strong a market today, but we are seeing some market for hunters and that type of thing, for recreation. And land for development, that's another thing that's interesting in the collar counties. Plainfield area, some areas, if they haven't destroyed it for development, we're seeing that land sell at almost farmland prices, and people who traded down south to get their land are trading back to buy their old home place back if they can get it. They sold it for $20,000 to $30,000 an acre, and they're buying it back for 7 to 8 or 10. Well, why is the land so high? Well, the U.S. net income, farm income is at record highs. 2 years out of 10, why we've been below average. We're high. And this year is projected to be a record year this year. Midwest land values are high every year but one. They were high. The low end didn't increase in 2009, but other than that, we've had increased every year for the last 9 years. Average increase 7 to 16%. This is on average. Doesn't mean in your area it'd be that way. Average income, U.S. average farm real estate values, when you take across the United States, look what it's done. We've gone steady since 2000, and we've had some big jumps in 2012. Now this is probably a little fine to read on the screen, but you do have it in your handout. And but look, go down to 2005. That's when we took the big jump. 2004, things were just kind of going along. 2000 to 2004, around 2,500 to 3,000 for good land, high quality land. And then in 2005, it jumped 25%. 11, 12, 13. In 09, we stood steady. In the last 7 years, we've had 81% increase, 7-year increase average 11.6. Well, you add that to your 3 to 4% return, and that's not too bad a return. That's better than most. It's income-based land value. You look at it again, you can see that land has not been on a bubble and is not now on a bubble when you can get $7 for corn and you can get 13, 14, 15 for beans. The income is there. And it basically follows the net income and the value per acre. So it's important you do your own cash flow and for what you think you can get out of the farm and what you can pay for it, and figure that out ahead of time before a farm comes up for sale, because you got to make up your mind pretty fast. Land values are a barometer of economic health and wealth of the farming community. We think that is the case here. It's pretty healthy. I think that You that own land are feeling pretty good about the prices increase. Historically, land has increased. We had a dip in 85, low in 85, 86, but we've just had a steady trend up here, and that goes back to 1970, and actually it goes all the way back to the 30s. Well, how does it? One of the reasons that land values have gone up is that comparative investments haven't been as attractive. And you look at it, the stock market on the same period, that 20, 30, 40-year period, it's about the same rate of return as land. While a farmer, a landowner, a person that's acquainted with ag, they're not really interested in other investments if they can buy land, put their money together, and lately it's done a lot better. So that's why we're getting investors. If the farmer buys 80% of the land today in the recent years, and the investor has bought about 20%. Whoops. What do we do wrong here? Okay. And as you look at this chart, you'll see that we're back. We started in '89 that farmers were buying owner-operators buying about 80%, and investors around 20%. New farmers down around 3 or 4% right along. Then we got into the 2001 to 2003, 2005. We had the number of 1031 exchanges, people selling their land for $30,000 an acre around the cities, and buying farmland down in this area or other areas they're exchanging it. And they were buying more of the land basically because of an attitude problem. Farmers didn't think farmland was that expensive, and it was quite worth it. But history turned out and told them that it was, and then they got back in the market, and now they're just as strong as they were. Why are they buying land? Why would you buy land? It's financial stability. It's a safe haven. You can walk on it, you can look at it, and you can control it. You can control the management of it, and it opens stability. And it's high risk, but it has a lower volatility than stocks and other investments. And in the world, we know that there's factors going on in the world that make it a safe investment, a safer investment than other places. The financial crisis that we have going on in the other parts of the world points us to safer investments, and we need land. Concerns about the world financial system, we're concerned about that. And when they start talking about things blowing up, and we're talking about our system right now, we're getting pretty high in debt. We're $145,000 per person right now in debt, and we've seen a tremendous increase in the money supply and deficit. This is a chart that shows the expanding money supply. Look at it. This is money that's created by the Federal Reserve. They put the money in it. And they're right now, if you've been listening to the political speeches, they're worried about that they put all this stimulus money out there and nothing happened. And that's because they're not turning the money over. They're putting it in their pocket. And the banks aren't loaning all that much, not as much as the government thinks they should. And even though they put all this money out there, it is inflation. Well, we're a farmer, we're thinking about inflation. How do you protect yourself from inflation? Well, always in the past, I've thought that land is the best protection against inflation. Why? Because its buying power, even though the price goes up, the buying power keeps, because it produces, the income that it produces tends to keep up with that. If you look at this chart back in the 85, 86, 87, we got returns in 79 and 80 when I was figuring cash flows on rate of returns to an owner or an investor buyer. I got down to 1.5% and 2%. Then when I got down to 86 and 87, we could figure a 7 or 8% rate of return on our land. And so it didn't do too bad. And if you didn't have high debt, well, you got along pretty well. And even though the price dropped, the value was still there and it earned. So then we took off, and people didn't buy then because they were concerned about what might happen in the future. And then these are another reason. The other reason the land has gone up is the value of the dollar has gone down. You know, when we sell more grain overseas, when the value of the dollar goes down, that's when Japan and China buy grain. When the value of the dollar gets a little too high for them, they shut it off. Well, the value of the dollar, that means your land is, your dollar is worth less, and if land has a basic value, it takes more dollars to buy it. If the value is high, it takes less dollars to buy it. And this is a figure that's put out by Federal Reserve and I think University of Illinois. The nominal value would be the price now, where this is an indexed situation. And if you put that at 10,000 up there, the nominal value, on the high at 10,000, and then you adjust it for inflation, down there you're about 44% inflation. So land hasn't gone up, it's just measured in terms of more dollars. Inflation adjusted, the value is about 40% of 10,000 or $4,000 an acre. So the buying power has gone up, and so is quantitative easing, if we go to the third round of quantitative easing, put more money out there, what's going to happen? I don't know. We've got low interest rates now. We put more money out there. We can borrow. We don't know what tax policy is going to be. Well, we're up against the cliff, as you hear about. Capital gains rate could go from 15 to 20%. More important to you, $5 million exemption right now, six, and that'll go down to $1 million if it isn't changed. Tax rates are reported to go up under the present regime. They're talking about 55, 60% tax rates, and where we've had 15 to or 25 to 35. So and then they're talking. They've got 3.6% that's going to be on your assets if you make $250,000 on a joint return. That'll be another tax that's coming in addition to income tax. So it's coming up there. Federal government spending, health care is an issue, defense is an issue. All this has gone up, $144,000 per individual, and tax debt. The other thing that's been happening to raise land prices is technology. And you look at the time it takes to plant a field or to harvest a field today. We used to think it took a couple days, but today you can harvest all of Macon County in 3 days with the equipment that's out there. You can harvest and plant it all in 3 days. I don't know that you can harvest it that fast, but it makes a lot of difference. And they can plant 80 on 160 acres in a day, and if you've got a big enough planter, you can plant 300-400 acres. And not only that, the accuracy of that equipment, you got better weed control, insect control, genetically modified crops. 240 bushel was pretty average or pretty good goal until last year, or this year, and this year things fell apart. But even then, the improved varieties proved themselves this year. Population growth and demographic changes in the U.S. and the world are affecting land values. That's why land may not go down very much. We're about 6 to 7 billion people right now in the world. We'll be at 9 billion in 2040. China has 20% of the world's population and only 7% of the arable land. That's why China's buying land around the world, and that's why China is importing crops, and because they got to take care of their population. China has over 1 billion people. India has over 1 billion people, and they got to feed them. Our arable acres per person has been going down as the population increased, and now we're down around below 0.6. We're down about 0.5 acres of arable land per person. U.S. sentence to 3,012 million in 2011. We're to be 2030, 380 million. 2050, we're going to have more total population in the U.S. than in 1950. Double. What does that mean? Potential economic growth, increased demand for land, food, fiber, and fuels, space. People want some space to turn around. 3 factors combining the growth rate: births, 3 to 5 million per year, longer life expectancy, and immigration. Changing global diets. The interesting thing about China is that as they get more income, they've improved their income, they're buying more meat, that's why they're buying soybeans and corn, feed their hog population, which is larger than the U.S., and they want to grow more meat. 20 to 21% of our corn and beans, ethanol adjusted, is going to China right now. This is an interesting thing. You think over 65, under 65. The red's over 65 and under 65. And the land ownership is in the hands of people over 65. 55% are over 65 years old, while 40% are over 70 years old. Well, people are living longer, and we're holding on to our land because we don't know where else to put our money. We like to pass our land on to our children, and even though our children don't know anything about land, maybe they're starting to learn because it's one of the better investments today, and we need to teach them. And so 48% of the acres are owned someone 70 years or older, and so that looks like maybe there'll be a lot of land for sale, but we're seeing mostly estates and bigger families that are selling out. Where do land values go from here? Well, I don't know where they're going to go. They could go down in terms of price, but the value of land is going to hold the same. It's not going to change very much. These are exciting times. As our yields go up, that'll increase our income. But of course, our expenses are going up there too. But generally, land is going to follow commodity prices, except there'll be a lot of volatility up and down, except that it's controlled by cash. If there's a lot of cash around the area today, and if the right farm comes up for sale, somebody's going to buy it, and they're going to pay pretty good prices to get it, because the competition is there. You're going to buy land if you have the cash or a manageable cash flow, and it sits in your goals. If your goals are there, you want to look at it at the long term. I wouldn't be a short-term investment, but if your goal is to have a long, safe investment, you're going to buy land or look at it. And if you've got a long, manageable cash flow, you can buy land. At low interest rates, land is pretty much about basically where the cost of earnings are. And at 3 to 4% rate of return for interest, interest on your money, 3% money you can buy for 5 years at 3 to 3.5%. For 10-year, 20% year, 20-year fixed loan is 4 to 4.5 to 5%, somewhere in there. That's not much higher than the actual rate of return on farmland today. So land is the hottest commodity in the world right now, and with the pent-up demand out there, I don't think it's going to be very much available. So you want to hold on to your land and buy it, and the way you buy it is get your ducks in order and figure out your cash flow, if you can handle the money or not, and decide if that's your goal, why it's possible. So thank you.